Hey guys, what's up? It's Frank here from Altcoin Buzz. Today we have some breaking news for you. PayPal are not just getting their feet wet, they're diving right in by acquiring BitGo. I'm going to go over why this is very big, important news. This of course relates to institutional investors buying every Bitcoin price dip it seems recently, and data suggests that this is exactly what they intend to do. But because I don't just give you guys what you want to hear, but what you need to hear, I'm also going to give you the other side of the coin, which is that these hedge funds are actually aggressively shorting Bitcoin. Okay, so let's dive right into it. PayPal is exploring acquisitions of cryptocurrency companies, including Bitcoin custodian BitGo, according to Bloomberg. This news came out just a couple of hours ago, so it's fresh off the shelves. PayPal in talks to buy cryptocurrency firms, including BitGo. So not just one firm, but firms. So this is according to people familiar with the matter. We don't have an official confirmation yet. However, PayPal has been holding talks with BitGo, a company that helps investors store Bitcoin, again, according to this anonymous source who asks to remain private. This reminds me of when CoinDesk published the news about PayPal providing these services for buying and selling Bitcoin on their platform. This was also according to a source, according to a person familiar with the matter. And of course, that turned out to be true. So I wouldn't be surprised if this is the same source or a similar source, and this turns out to be absolutely true as well. Now, why is this a big deal? Well, BitGo, which raised $58.5 million in 2018, actually has a valuation of a whopping $170 million. This is no small company. This is a big deal. PayPal are not just getting their feet wet, as I wrote here, but they're diving right in by acquiring one of the most major crypto firms, crypto companies, BitGo. And BitGo, in case you didn't know, was one of the very first companies in the space to focus on institutional investors. Not surprising, since it was founded in 2013, before pretty much anyone had even heard about Bitcoin. Now, interestingly enough, PayPal said it would partner with BitGo competitor Paxos Trust Company, a regulated provider of cryptocurrency products and services. So it looks like PayPal are not just diving into the pool of crypto, but they're specifically targeting and interested in these custodial services. Of course, makes sense since they themselves will provide Bitcoin custodial services. Note that if you buy Bitcoin on PayPal, you don't own that Bitcoin, all right? PayPal still own it. So although it's great news for adoption, it still does not actually mean that you own that Bitcoin. And that's why I found it quite amusing that they said here, custodians like Bitcoin are responsible, Bitcoin with a capital C, are responsible for safekeeping digital assets under secure storage. I actually made a tongue-in-cheek comment over here. Bitcoin, no, simply no. BitGo is the custodian. Bitcoin is the opposite of external custodians. Bitcoin makes you your own custodian, your own bank. You're the one responsible. You have the control and the power. So Bitcoin, first of all, not with a big C, and definitely not your custodian. You are the one who's responsible for that when you own Bitcoin. In any case, what else is interesting and important about this is that BitGo is backed by investors, including Goldman Sachs Group. Goldman Sachs Group, of course, is a massive institutional investment company. So it just goes to show that institutional investors are crazy for the Bitcoin. They want more of it. And now the question is, are you going to buy more of it as well? I know I am. I know I have. I've told you about this in previous videos. I've been stacking up my Bitcoin. I've got long-term holds, I've got short-term positions. I also got into an Ethereum position recently, but of course today's video is not about that. We're talking about institutional investors who are planning to buy every Bitcoin price dip. How good does that sound according to data? So a new survey of data shows institutional investors intend to increase their Bitcoin allocations regardless of short-term dips in Bitcoin price. Now, they did some really interesting survey here with these questions. Listen to this. Over $78 billion in assets, first of all, is managed by these institutional investors that they interviewed. And a standout response here was that a shocking 26% of participants believe that pension funds, guys, that's a huge money. Pension funds, insurers, family offices, and sovereign wealth funds will raise their stakes in cryptocurrency drastically. Now, this is just 26%. It's not a lot, but they think that they will raise their stakes drastically. What's even more interesting is that a further 64% of the participants, the majority, believe that the increase in interaction will be moderate. But the key word here is the increase, right? They still all believe, essentially the overwhelming majority believe that institutions will be buying more and more Bitcoin. So the way I see it now, we have bitcointreasuries.org telling us that institutions have bought about 3.5% of the whole Bitcoin supply. I think this is just going to go up and up. It only makes sense that it will. And of course, retail investors will come in. Guys, this is such an exciting time to be in crypto. In any case, 32% of the respondents believe that hedge funds will also increase their crypto holdings drastically. Now, we have some very interesting news about hedge funds, which I'll bring up with you in just a bit. This could actually be a bad sign for Bitcoin moving forward. But before we get onto that, let's just finish up over here. So some concerns which institutions still have is that more than half of the participants in this survey said that they are concerned about the lack of insurance for digital assets and the quality of custodial services. So obviously PayPal buying BitGo shows that they are very serious about improving custodial services, and I'm sure that these concerns will be very much alleviated over the coming months and year or two. So now institutions are taking the bird's eye view, guys. They don't care if Bitcoin falls 20 to 30%. When Bitcoin fell from $12,500 to $10,000, $9.8 even thousand, these guys, they don't care. They're taking the bird's eye view. They are taking the long-term view. And this was evidenced by the fact that the trading volume for backed Bitcoin futures reached a record new high of more than $200 million worth of contracts exchanged. So the mainstream fund managers are beginning to enter the market, and this is a major factor in the institutional adoption of crypto. We are humans, we are social creatures. If we see our leaders, if we see people who have lots of money, who have lots of power doing something, then we pay attention. So, it's crazy that Bitcoin is only at 13,000. Guys, we're not even at previous all-time high of 20,000. Like we're not even on a massive bull rally yet. Gold reached its previous all-time high already, surpassed it even, and Bitcoin is still a long way away from there. I mean, I don't know what you're waiting for if you haven't bought Bitcoin yet. Another article by smallcaps.com.au, Bitcoin goes mainstream as institutional wall of money begins buying. Just picture that, a massive wall of money buying Bitcoin. This is what it looks like on the charts. If you're trading, you see these massive buy walls, and this is exactly what it is. It's just a wall saying, hey, nope, we're not going to let the Bitcoin price go down. We're just going to buy more and more and more. Now, of course, if there was nothing but bullish news, then it would be too easy. There's always the other side of the coin to look at. I want to give you guys the news, not just which you want to hear, but what you also need to hear. And this is that hedge funds are short Bitcoin, despite institutional Bitcoin longs being at record highs. Not only are they short, but they are aggressively shorting Bitcoin, according to Joseph Young on Cointelegraph.com. And this, of course, was written on October 19th, 4 days ago. So this plays a very important role. I'll mention this in just a bit, why that is. But in any case, according to CME, the amount of Bitcoin long contracts held by institutions are at an all-time high. Yet, however, CME's most recent commitment of trader report shows hedge funds are at a record high for Bitcoin shorts. So why is this? Why are hedge funds aggressively shorting Bitcoin but not institutions? Well, hedge funds have a variety of strategies. They're usually more high risk, high reward types of strategies. And also, obviously, they have the short term in mind more than institutional investors do. Institutional investors, however, are looking at the big picture. They're allocating a percentage of their portfolio for medium to long-term investments, and this means they are not concerned about the short to medium-term price performance of Bitcoin. Now, you may be wondering why these hedge funds are shorting Bitcoin. Why would you want to short Bitcoin? It certainly is a high-risk strategy, if you ask me. Well, many hedge funds are likely shorting CME futures hedged to capture the basis or providing liquidity to the institutions going long. So this is something I do myself sometimes when I'm in a long Bitcoin position. If I have a large amount of my portfolio in a certain coin, then I sometimes enter a short-term short to hedge against that long position. In other words, if we fall, if the price drops, then at least I profit from that short without having to sell my Bitcoin. But now what's really interesting about this, guys, is that this article was written a few days ago where it said that Bitcoin has been unable to break out of the $11.7 to $12,000 range. I guess these hedge fund managers were not aware that PayPal was going to announce that they are officially accepting cryptocurrency, Bitcoin Cash, Ethereum, Litecoin, and Bitcoin, of course. Because obviously that 11.7 to 12K range was smashed through. We are right now at $13,000. So it makes you wonder, are these hedge funds still short? Maybe they're adding more to their shorts. Who knows? It's certainly something to watch out for, though. But in any case, guys, I really wouldn't worry about this. Hedge fund managers, they're using these high risk strategies to potentially hedge against their long positions. But the main story, of course, is that institutions are all over Bitcoin, and you should be too. Guys, for me personally, this is a very, very exciting time in crypto. I've been in crypto since May 2017, and back then it was really just retail investors. Institutions were not really interested. Everyone was saying how, oh, when institutions start buying, if institutions start buying, if they start allocating small percentage of their portfolio, this could get absolutely massive. Guys, this is just the beginning. This is actually happening right now, but it is just the beginning. It's not like institutional investors are all of a sudden going to stop buying Bitcoin. This is just the beginning of them buying, and it's only a matter of time before more and more institutional money will buy and before Bitcoin reaches its all-time high. I thought before that we may have a longer cycle where Bitcoin reaches its all-time high in 2022, but honestly, with all this bullish news, it just seems unlikely that we wait all that long. Gold just smashed through its all-time high, went pretty much in a vertical line all the way up, and I don't see why Bitcoin wouldn't be able to do the same thing. Alright guys, that's been it from me for today. I hope you liked this breaking news. Don't forget to follow us on all the socials like Altcoin Buzz IO. Of course, we posted this tweet just before making the video. Alright guys, that's been it from me, and I'll see you in the next one.